to today's fast video, which is called Non-Farm Payrolls Tomorrow and AVGO Earnings Today. What kind of marvels will it do for S&P 500 and Nasdaq? Such is the S&P 500 daily chart together with breadth indicators. What's more important to me than advanced decline line, meaning issues or volume, is that new highs, new lows had made a new clear move higher. And as we will see further on, regarding the kind of lackluster sectoral perspectives, there are more than a few glimmers of hope. Such is the quite unappealing daily compressed range as seen on the 15-minute S&P 500 chart. Two important data points: notable miss in ADP employment change, that's smaller companies all the way till 30 employees reporting, and the hit did last maybe less than half an hour. Well, so much for that. It's backwards looking perspective, and I've commented about it as such in the premium intraday channels, together with, say, unwillingness to bet big regarding services PMI, and the days these have come below neutral, so that's not a good sign. And those tariff wars are catching up with not just consumer confidence and job market, as seen in both initial and continuing claims, which I had been talking that the pressure is slowly rising there. However, it's nowhere near a recessionary imminent warning or any kind of warning, no matter the delinquencies level, no matter the company formation and winding up level. That's not, or used car prices. These are other favorite leading indicators of a recession approaching. This is not painting an immediate sign of danger. However, stocks did lack a good catalyst to move higher and remained trapped within a narrow range. And the question is, will they move higher on AVGO, or how does the sectoral perspective differ? You remember, and I will be linking to yesterday's video. Thank you for liking these videos and subscribing to the channel. The picture is very different when it comes to Nasdaq. We had seen a stop hunt on the second push lower following services PMI, and ever since then it's trending higher, whereas S&P 500 is just sideways. So what could it mean going forward, going into today's session for swing traders and intraday traders alike? Such was the ratio of QQQ to SPY that I had featured in yesterday's video, and you see it's drifting higher and very nice development. No fear of a bearish divergence in this ratio. I had been clear in yesterday's video, so make sure to review it. And here we go. And you see how lackluster tech performance had been on a daily basis, and that there had been actually better stocks compare communications, Meta to, say, Tesla, discretionaries, and so on and so on. Talking Tesla, one thing springs to mind when I was talking about the job market and continuing claims and temperature rising and soft data coming in weak for quite a few months on the consumer front. We are seeing that balanced with a beautiful deal. So much for those expenditures cutting. New expenses are being made. Gold, silver and miners, they are clearly sniffing this game, and as per calls made to clients following the preceding day's humble retracement, we are seeing a fresh push higher, and this is something that is to continue through today, and clients have been positioned for further gains. So much for if you examine GDX, the gold and silver. Oil, there we see an important chart development too, which I believe for trading signal signs. But suffice one look at this chart, and what do you make of the descent in energy stocks and relative resilience in oil itself? Can it continue, or will oil need more time deciding on its next direction in earnest? My joint page will help you decide what's right for you based on what and how you trade. Combine quality daily analytics with the intraday channels for the greatest punch.